All right. What is up, tycoons? What's up, traders? Super excited for today's video. We're going to talk about the 500K price target on Bitcoin and if it's possible. Okay, we're going to go into a little bit more of a fundamental analysis. All right, taking a look at some of the supply and demand and using the stock to flow model. All right, so be sure to smash that like button, subscribe to the channel if you guys are new. As always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclaimer. Now, people use many different methods to calculate the future price of things, none of which are perfect. It's not possible to predict the future, but some methods have a better track record than others. Today, we're going to look into the stock to flow model and how it predicts that Bitcoin will be worth over 500K by 2025. Now, what is the stock to flow model? We can break it down like this. The stock is your current supply and the flow is the upcoming supply in the next year. Put simply, the stock to flow model looks at how many Bitcoins are available and how many are being produced, basically mined each year, and estimates the price based on that ratio. Over time, less Bitcoins will be mined because there is a schedule of how many Bitcoins can get mined and a max allowed supply. So by its very nature, the ratio between the stock and flow will increase over time. And this is a chart here of the issuance schedule and the inflation rate. And so you have the Bitcoin supply here in this tannish line. You have the inflation here in the inflation rate here in the red line. And new Bitcoin are created in every block. The amount of new Bitcoin created per block is halved every 4 years. Thus, Bitcoin's maximum total supply is just below 21 million Bitcoin. Now, if you know about supply and demand, you know that if supply increases while demand stays the same, the value decreases. But on the other hand, if you have less supply than there is demand for something, the value of the supply goes up. In other words, how rare something is increases how much someone will pay for it, at least in theory. The stock to flow model works on the assumption that the supply of Bitcoin will eventually plateau, but the demand for it will not increase and hopefully will increase. So more and more people will want Bitcoin while the amount being sold either goes down or stays the same. So the value of each Bitcoin will increase as people will be willing to pay more for an asset with a limited stock. But of course, this is assuming the demand is the same or higher, and there really is no way to know that for sure. Now, how accurate is the stock to flow model prediction? It's not necessarily very accurate. Overall, Bitcoin has had higher highs and lower lows than the predicted model. Of course, the stock to flow model is a predicted average of the price, not the specific price. So the highs and lows are not necessarily the most accurate measure of the model's usefulness. The trend followed the line fairly well until 2021, but then it deviated, the prediction being significantly higher than the actual price. This is where it is important to note that the model was created in 2019. So of course, the historical data will fit as the model was created to match it. And we can take a look at it here. All right. And you can see we're at this lower part right here. But essentially, it goes through these periods where it experiences mean reversion. Okay. What that means is that it's trading above this line. It comes back down. Okay. It's trading below the line. It comes back up, comes below the line, goes back up, above the line, it goes back down. That's that mean reversion that we're looking at here. And you can see that we are very, we're definitely below it right now. All right. 2022 was a very rough bear market, big crypto winter for a lot of people. And, this right here, this color coding, all right, this is your days until halving. So, we are getting closer to the next halving. All right, approaching that time. All right, essentially this line right here is going to be your cycle, and we're right around in that middle of the cycle right now, just past that, getting closer to the next halving. Now, the black line is the S2F prediction, the rainbow line is the actual price, and the red parts are when the halvings happen, which is when the mining reward is reduced by half to maintain its scarcity, which happens every 4 years. Well, it could be argued that the deviation is only due to the bear market or macro factors such as the pandemic and fiat inflation, or that the price will recover. This model is built on supply, not on actual dollar value, which isn't logically equivalent, right? So in other words, the rainbow graph is measured in dollars, but the black line is measured as a ratio of total Bitcoins created divided by the Bitcoins to be created in the next year. Since these two things aren't measured in the same amount, essentially this chart has been created by taking the black line and stretching it in a way so that it fits well with the rainbow line. This is somewhat like comparing apples to oranges. Just because they're both round does not mean they're the same thing. Just because these lines seem to match doesn't mean that they are the same thing either. All right. Now, these are the Bitcoin market stages right here that we have. Okay, this is another nice, colorful chart right here. And you can see the different stages. All right, blue, we have green, yellow, and then red. And so that chart does not have the stock to flow model displayed, but is instead a chart of Bitcoin's price each month. You don't have to be an expert to make an educated guess where the chart is going. It would appear that the price is about to skyrocket again as we enter the next green stage, but only time will tell. If you're curious, here are the last three and the next halving dates. So we had November 2012, July 2016, May 2020, and then April of 2024. And here are the local highs on the chart above. We have June 2011. We have November 2013, we have December 2018, and then November 2021. So all of those were about a year to little over 2 year after, we had the halving. Okay. Now, people have been trying to time the market for centuries, and they'll try to do it to Bitcoin as well. Although, as you can see above, the time between halving and the next local high isn't always predictable. Who knows, though? Maybe enough people will make a prediction that the next halving will cause the price to skyrocket, so they buy Bitcoin early, and it'll become a self-fulfilling prophecy. Again, this kind of prediction requires that demand for Bitcoin goes up while the supply eventually stops going up. It's an assumption of scarcity and demand. While scarcity is easier to know for sure, demand is impossible to know. Additionally, the price won't necessarily go up as much as predicted, and certainly not in the same exact ratio over time. Predicting future price is about as accurate as predicting inflation, which, as we have seen in the past few years, is not actually a science, more of a guess. So on another note, this model will fail if the US dollar is hyperinflated, right? So stock to flow does mirror a basic adoption curve, and we know that Bitcoin and crypto in general is becoming more adopted internationally, aka more people are using it. But whether or not that trend continues is anyone's guess. This is especially important to keep in mind with all the regulatory uncertainty. If people are literally unable to buy Bitcoin, or if it is made illegal, the demand to buy it will go down. Having said all of that, the basic assumption that Bitcoin will continue to be more adopted and will become scarce is not inaccurate. So it is possible that the general trend will be upwards. Basically saying that price will go up over the long time horizon. It's just not really possible to say exactly how much it will go up. So in conclusion, while price prediction models can be tempting, we have to remember that they are predictions, not science. It's important to look at when a model was created and be really diligent about what exactly it is claiming and how it claims it. This particular model is modeling scarcity as a function and then mapping it to price by matching the historical price data so that the scarcity model fits well. Some questions we should ask when looking at any prediction model are: what assumptions is the model making? What is the model not saying that it should be saying? When was the model created? And is there data to support the retroactive prediction? Crypto prices are extremely volatile. They aren't based on physical commodities, so they really are just worth what people are willing to pay for them. Thus, trying to predict the future price is essentially the same as trying to predict society's emotions. And remember, no model will ever be 100% accurate, so no matter how accurate it has been, it may not continue to be accurate in the future. Now, that wraps up today's video. Hopefully, you guys enjoyed it. Smash that like button and subscribe to the channel for more.